All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for November 5th, 2021, Friday night edition. So we'll be looking at quick debriefing of the day and then a review of the weekend reports. Tomorrow, 8:30 in the morning for the coaching group, 6 p.m. for the Foundations Q&A, 8:30 for swing trade review, and then Sunday night, the usual 8:30 trade frame review. Quick admin note: the Creativity 101 course is up and running now. I see Mark is in here tonight. I need you to check that link. It shows you as an active student in there, and I want to make sure that you have access to it, so we can sort that out if it's not working for you. I also put a meditation 101 course on there, 5 lessons, a non-denominational approach to meditation that puts it into simple, straightforward terms. It's an essential part of my daily prep and my maintenance of the zero state during the day, and then part of my debriefing after the market, and then on my long walks with the doggies nightly. So 4 times a day for me. So I wanted to share those with you. I'm asking for a $20 donation to the Soccer Academy for that course. But if you're in the sound of my voice and you need a coupon instead, that's fine. I'm happy to help. But we're asking for a $20 donation for that one. I've got a few more courses coming up that are like that are kind of foundational. I'm going to be putting together the Systems Thinking 101 course as a prerequisite for the Traders Applied Systems Thinking 202 course. But I want to get some of that basic knowledge out there. I've been listening to a lot of the work of John Taylor Gatto, who was a multiple award winner of the New York State Teacher of the Year. He's legendary in the world of effective youth education, a libertarian, a hero of the common man. He's done tremendous research into the background of the untold history of American public education. And he was talking in one of the interviews today about creativity and what it takes for breakthrough thinking, and what he has found from classical education, which is reinforced by the work that Angus Fletcher does with creativity, is that the most creative people are not narrowly trained in disciplines, that the big scientific breakthroughs tend to come from folks who are broadly experienced and broadly educated, and who have multiple points of view that can be brought to bear on thorny problems. That you need those different experiences and perspectives in order to get fresh thinking on a subject. And so I'm taking that to heart by adding some more supportive and peripheral kinds of teachings into the course offerings, so that we don't get stale on just trading. So you can expect more of that coming out between now and Thanksgiving. Starting to get some of the papers in from the folks involved in the research weekend, and they are amazing. And we're going to run that as an ongoing course in the Rizuku platform, so that we can have good engagement and outreach with that asynchronously. Phil Wu has done a simply phenomenal job of creating 1-page Cornell note sheets for nightly podcast sessions from the Foundations Q&A from April last year, of this year, and also for a series of bar by bar trading exercises that are just precious. And they make a great set of study notes and episode guides. And he's done a real service to the community. I will be hanging those later tonight in Patreon. And they are time stamped with all the critical trades and concepts and insights, and in a single sheet for each podcast episode, and they are just remarkable. So it's I think a way to really leverage the power of the archives that we have of the last 18 months. I mean, we've got over 400 podcast episodes, and he's doing us a service by getting all the lessons learned documented. The next thing I'm going to do is turn him loose on the live trading workshops of the past 10 years, starting from the most current ones and working backwards. There's some tremendous gold in that mine, and having him go through it and unpack the lessons and getting timestamps is going to create a real product of value for us all that will stand the test of time. I mean, the lessons that we've learned over the last 10 years still remain valid to this day, and the tapes are just there waiting to be exploited. And so I'm really eager to see what he comes up with on those. So having said that, let's go ahead and jump into the work tonight. So you will recall that yesterday I had moved my stop up to just underneath the 1 bar low because I wanted to lock in all of these gains, because this was where the owl entry and the SSC had occurred around 440, and we wanted to lock in that much of the gain. Today it gapped up, pushed to a new high, rolled over and closed here. So this is still a valid stop. What I'm going to do is just consistent with best practices. I'm just going to lock in one more little piece and just go to there. If it comes through there and reverses and goes higher, I know how to re-enter. But what I want to do is I want to lock in the gains of that move at 466 and keep milking this thing for what it's worth. The RL30 is still strong. Zoran, I'll just use the same Kata 2 entries like I always do on 1 minute, 10 minute, 30 minute, 60 minute, and then dailies. The same way that I always do. So on the daily, the re-entry would be here. On the intraday moves, they would be somewhere sooner than that, because if I have like a re-entry at this price level on the daily, and the thing hits my exit and then starts working its way up intraday, well, if I'm on 1, 3, 5, 10, or 30, there's going to be some kind of re-entry possible intraday that's going to make money that allows me to take a position which if it goes through my entry for the daily, I can hold a piece of this, like 20% of that. I can hold that as the new swing position with an entry down here instead of getting the entry up here. The price moving through the all-time high is the signal that it's off and running, but I will use intraday technique to trade inside here if my stop is hit, and then I will use that money to build the swing position. We cover that extensively in the advanced hybrid course. That's standard. That is standard work. Okay, so what we have is the 3-period whole moving average is strongly up. The extension of the RL30 is strongly up. The PSAR is continuing to march its way northward. That gives you a little more, a little standoff room, a buffer, if you will. So if you don't want that tight stop here, you might have been using, the PSAR all the way up and you're still in that trade. It's just, I don't like to give back that much after such an exceptional move. That's why I move my stop up to here. But the PSAR is still showing its way up. The Bollinger Band mean, the BB30 there, is up and working. You can see that we had the Z3 pinch right there, and that the expansion is telling you that strength of trend is increasing, that the volatility is all towards the upside. So the directionality or the expansion of the Bollinger Bands is an indicator of increasing trendiness, increasing directionality here. Let's see, what else do we want to look at? Yeah, we're slightly above the, this is the RL270. That's the fair value, long-term fair value. This was the peak extension of the RL10. That was the widest gap between the RL10 and the RL270. So when this thing starts moving back up, what we notice is this is where the RL10 equaled the RL270. So that's the move that brings it back to the long-term fair value. And now we have overshot that by those 3 days. So the question is, how much higher than the RL270 can this reasonably go? Well, the way we reason that is by using the fractal nature of price. And we say the RL10 is the short-term traders, and they were able to move it this far away from the long-term fair value. And that's the difference between about, call that 460, and where this was down here at about 430. So they were able to move that $30 away from long-term fair value. So we know that markets are symmetrical. And so the overshoot to the upside could be as big as the overshoot to the downside. So we take this price level at 464 and we add 30 to it, and we say 494 would be the upside excursion if the traders have their way. And if they're able to move it $30 beyond fair value, this thing could get to 494 before we're allowed to be surprised. So it kind of looks like a giant yin yang symbol. You have these checkpoints here where they all join, and then they moved at $30 to the downside. It rejoined here, and now you say how high to the upside? It could go $30 to the upside. So that would take it to 494. Okay, so we are still well within normal conditions in terms of price stretch. That's like the stretch and recover, if you will. Right. Let me know in chat if you found that helpful. All right, next up is the sectors. Okay. So next up is the sector analysis. So we have the S&P was up 0.35 today, just continuing to cruise. Slightly better was the Dow at 0.54. Much better was the Russell, which had just a tremendous week at 1.37. And then treasuries at 1.5 have just quietly gotten within 70 cents of the key price of 150. So there are some people buying that as a hedge against a retracement in the S&P. And so that's pretty good. 150 is the key price level, though. Last time it got to 150 is where it rejected. So we'll see if it's able to continue to power north. All right. The sectors that did better. Oh, let me finish. The underperformers, I should say. Yeah. So the underperformers to the S&P, the Qs were only up 0.1, and the emerging markets were the loser today, but they were only down 0.12. So this was a pretty positive day across the board for just about everything. All right, so let's take a look at the movers today. So we had lumber and S&P Tech 0.52. We had the S&P staples at 0.6, Ethereum 0.64, consumer discretionary 0.64, materials 0.78. Energy and Mexico 1.3, 1.5. Blended commodities on the strength in energy at 1.4. Wheat and precious 1.8. Brazil 2.3, oil exploration 2.7. Simon Property Group is our commercial real estate proxy, 2.9. Oil 3%. VXX 4% essentially. Marijuana 9.5% for the trade of the day. This one's going to blow you away when we look at that one. Individual companies and targets. Alcoa 3.2, Devon Energy 2.9, John Deere 1.25, Cliff 0.8, and then those are so still a pretty wide range of outstanding targets to go into Monday with. All right, the underperformers for the sectors. You had the other lumber at 0.17, finance, blockchain, the blockchain futures also down 0.1, large cap blended crypto 0.16, agriculture minus 0.5, Bitcoin minus 0.6, the FANGs 0.8, clean energy 0.85, ARC Genomics 0.88, Moonshots 1.25, lithium 1.4, S&P Bio 1.4, ARC Innovation 1.7. Individual companies that underperformed. Squarespace, Coinbase, and PayPal, the financial service disruptors, always volatile, -4, -2, -1. Tesla down only was down 0.64, still holding above 1200. US Steel 0.57, Virgin Galactic 0.5, TX Steel Company, Robinhood 0.16, Microsoft down a fraction. So clear winners in the materials, consumer discretionary, broad indexes, and energy. I mean, there's plenty to choose from there. Take a quick look at the trades from the team today. Okay, so here was the Z3 Pinch. Get this out of the way. Here's the Z3 Pinch in the open. He doesn't bite. He lets it come back here. And now on that next move up, buys it here, lets it run all the way up past Z3. So that makes this bar 1, that's bar 2, and this is bar 3. So the bar 3 or the 1, 2, 3 exit would be right here. We didn't get that until here, and that made it a scratch instead of what should have been about maybe a 0.5. Re-entry was reasonable. It failed quickly. I want you to get that at the VWAP instead of suffering down here. So we might have trimmed 0.5 out of that one. Good effort. Oh no, I'm sorry. Here's a second re-entry still going long. No, I don't think the risk box is too small. Those are reasonable. If that's going to work, it should be working. And that's Cliff, as you know. What I'd like to see you do is get this exit as the short instead of this one. And then when you get this, dude, you got this much in hand and you're pushing Z3 again, and you let it come all the way back to here, and you're keeping 0.2 out of what was basically 1.0 favorable excursion, and you gave back 80%. This rollover, I don't mind that entry short. This is a good scratch, or I mean a good exit. Reasonable reentry. This is maybe getting too tight, but I'm gonna honor the 1, 2, 3 exit. Reentry again, pushing Z3 for 3 bars, and then there's a 1, 2. That's a 1, 2, 3, but I'd like to see, especially after that series of chops, I'd like to see you get more than 0.4. Reasonable, reasonable. Getting a little gun shy. This is late getting in. You should be right in here when it turns to winter. Good entry. Here's where your second entry is indicated, not here. And then that would make this one probably pay for all of that. And then once again, late on the exit, you're pushing Z3 and you're still giving back that much. Reasonable shot. Now, finally, good entry, good second entry. You're pushing Z3 and it's reversing, especially with all the previous excursions, how quickly they reversed and no follow through. We got to get more out of that than this. And that's on 2 positions. Then a little slow getting back in. This should be right about here. And that's a great exit. So only down 1.4. I think with better play, that's at about a +2. I think there's 3R of improvements in there. Still, on a day where it was kind of choppy, you lose 1R. On and days when you're crushing it, you're getting 15R. So that's you're 10 times better on the days when you're aligned. So don't sweat it. This is just learning, and you made some sawdust and wood chips today. So release the feelings, become professional, a little thicker skin, and tighten up your shot group. But pretty good work today. Good learning. EWW. All right, so we're going to be positive for the day. That's good. Big gap up. It opens, holds, and then starts going again. You got to crush that one on the entry right there. That's like a OR5 after a big gap, and you get a 5-bar chop and it's moving out. You got to get this with a second position here and then exit right here. And then that becomes a good short when it crosses the Bollinger Band mean. That's a beautiful short. And that's a good second entry because it was hesitating and then failed again. I consider that a collapsing dragon. That is great stuff. That's not bad on the exit. I don't mind that one at all. So that's 3.5. Hard to get much better than that. Excellent reentry and reversal. I like the second position. You're close to the VWAP. That's fine, but that's too late getting out because you got 2 positions on. You should be out here at the PSAR. As a rule, if you've got 2 positions on and that second position just started and it reverses and hits the PSAR, take the sniper and be done with it. Having said that, this is a pretty good, that was a stop and reverse short. I'd like to see you out here with a stop and reverse. Then you're going to get this trade. But that's a reasonable scratch. That's a reasonable effort. Still had enough horsepower to get this. That's fine. And that's a pretty good exit. You didn't let it get through the dragon, but we're pushing Z3. So maybe we can do a little better. Here's your Kata 2. Big time goodness. We're all at this entry here. We're already past the Z3 pinch and we're way up in here. So you're good to get out of there with just that micro lost. Now what I'd say is maybe here is probably a short to take, but if you get that short, then you probably scratch there. So that's not bad. So net positive for the day. There was a couple R improvements in there. Not bad. Not bad. There was a lot of grinding today. Cliff, this was about the same results as Luke. Not much there today. Reasonable effort on the short side and scratch. Reasonable effort on the long side. I probably want you to get this here instead of all the way down here. There's a Kata 2. There's a Kata 2. This one, you're getting it as it crosses the VWAP. That's not bad. With an exit here is good. I want your short to be here when it crosses the Bollinger Band mean. And now it's pointing to the downside. And then you should be exiting here. So that would be about a scratch. This entry, getting a little gun shy, that should be down here when that spring turns to summer, and then you have a low and a higher low. Your entry should be here, and then your exit would be here. That would be a micro win. This is the exit for this long, or for that long. That's where your short should be, and I want to show you why. You've got a high in the RL10, a lower high. You got this lower low here. So that sets up this as a collapsing dragon. That's a big time short, and your target is going to be back over here. There's reason to believe that this is in range, and in fact, you end up getting there later. That actually becomes a pretty important support level. It fails down to here. It raises to there. It takes off from here. So that low was a crucial price level during the day. This is where your Kata 2 should be, and not here. And that would make this a winning trade instead of a losing trade. And then now you have this high, a lower high, a third lower high. That makes this massively good to the downside, and then you end up getting that trade. We got to reset to the zero state. We either got to get short here or definitely short here when that rolls over again. And then that gives you this move, which would turn this into a positive day. This trade and that trade would make this positive. So there's three really good trades. 1, 2, 3 that are possible. I'm not even counting this one, although that one's pretty good. So there are 4 opportunities to make some improvements in there that need to be studied. Okay, so not bad. All right, so here's a trade frame, and what I want to show is we have like a Z3 pinch, harsh winter that comes right back and holds at the VWAP, and now we get a I would think of this as this is kind of a late entry, if I'm being honest. There's a Kata 2 right in here, or an SSC, I should say. That's an SSC. This is probably a Kata 2, but it's getting close to the Z3 pinch already, right? I'm looking for a price target of the top of the RL 30. The RL 270 is within range on that kind of a move. So the trade I took was this one. With a stop down here below, with the bottom of the dragon. So I'm taking this stop right here. Right. Right in here, I've got to pick up my stop. I've got to be at least here. Get that second position in. I'm probably here now. And as soon as I can, I want to get that locked into no lose plus dinner for 2. By this time, I got to get my stop up into here with the PSAR and lock in some gains. By this time, I got to be about like that. I should be out here. I was slow to exit, ended up taking this one. The Z3 is starting to pinch. I buy the Z3 Pinch Breakout. So this is at like, 3:20 in the afternoon, Central Time. And so I've made some money. I've made some money on this series of trades. So just, let me try it. And so I'm just going to clone my stop. And really, that's like a 10-cent stop. So long at 26.75. That's what that looks like now on the next. Let me move this in a little bit closer. It was so late in the afternoon, I just decided, well, I'm just going to play with one. So my initial stop here, now I just say, I got to get to here. Now on this one, I want to lock it into there. And just keep pegging one position. Keep playing a 2-bar low. But this time I just said, I got to do something with this. Put a second position on. Lock in. Lock in the gains. Two-bar low. Finally, can't take it anymore. Take that exit. So for about a 40-minute trade, that thing is long at 26.80 and exits at 28.10. So that's $1.30 on a 10-cent risk. That's 13R on this one. And then this one is at 27.50. So that's 60 cents. So that's about 19R. The alert was from the TC2000 screen. Suddenly, MSOS had jumped to the top. By this time here, MSOS, which is that marijuana ETF, had jumped to the top of the performers, and the flashing green light said it was working and breaking out above Z3 after a super pinch. This is a super pinch. That is what happens sometimes in a super pinch. So anytime the TC2000 bundle alerts me to a super pinch condition, I'm on it. That thing can scan 1,000 symbols at once, and it plays an audible tone to me when a super pinch condition happens in one of the 30 or 40 symbols that I track, and the marijuana one is one. So 20R, that trade pays for if you're trading at $400 a risk, that trade, if you trade at $200 a risk, that one trade pays for the TC2000 bundle. Just saying. Use power tools. All right, here's one. This is a gap up. And it gets a big, nice big move that holds right here. And I want you to notice when you get that kind of gap and this thing goes up, down, and up, and this low, and then the VWAP is here, it's holding support at the VWAP and takes this out and makes a new high of the day. I go with a stop at the low of the day. And and now I'm just checking to see how fast can I move this stop to no lose plus dinner for two. And with this much in hand already, I'm almost ready to do that, to take 1 to 2 minutes of open risk. Yeah. Not going to lose money on that trade. Hits my, it does this. I want you to, it has the, you can feel it flattening out, and it hits my sniper exit there on the PSAR. Exit. Now it crosses the Bollinger Band main to the downside. So I'll venture that. My first target is to the VWAP. And then if that collapses, I think it'll come down to all of this. And if that collapses, it may come down to here. So that's like 1 leg, 2 legs, 3 legs. Could it get that far one day? Yeah, it just did. So just play a stop like this to the PSAR dots. And then my re-entry to the upside is if that trade fails and breaks out above the RL10, I'll just take it and stop reverse the other way. Now it's crossed the VWAP. That's good. I should have had a second position on approximately here if I was better. I didn't get it until finally woke up and I saw the Z3 pinch breakdown. So there's the Z3 pinch. And so I took it here instead. Fine. Now I'm looking for this kind of a move. One, two, three, exit-ish, kind of spine of the dragon. So, you know, that trade, if you just look at the life cycle, this thing opened here and came back to here, and it went to here and it went to there. That is so normal that you don't even think twice about that. And each one of those is about 2R, you know, from this risk box to this, to that recovery, or that exit there, I should say. That move is about 2R compared to that risk box. And then this move to here is about 2R. And that one has the advantage of having a second position for an extra R. So that may be 4 to 5R in there. Brazil. And then I had a couple more. I kept trying it. I tried to re-enter on the short side. That failed. I tried the stop and reverse, caught a 2. That failed. And I said, that's enough. And then I missed this. and then I couldn't get in the zero state fast enough. And that's where I should have been, because this thing that's now a chance to front run, trying to front run the VWAP. That makes this a good breakout move because it's cleared all this crap. The Z3 excursion, it cleared the RL270, and I'm still on the value side of the VWAP. And then if it breaks through there, I have reason to believe it could get to here. So that's the trade that got away. All right. So I just, while we're here, I want to say something about, just administrative tricks that I want you to notice that I use standard naming nomenclature all the time on my files so that they group together logically, like the Tortoise Weekend reports and then the date. That means when I save them in the same directory under my reports folder, they sort by date sequence. So I have them all in one spot. So I can go back and recover the ones that I'm interested in, the last 20 years. And when I'm doing the, let's see, when I'm looking at my daily reports and I want to rebuild the stuff, I can go, I just name those D something or other. So there's 28 or 2018, 06, 07. So that's June 7th, 2018, all the way down to the present. So when I am paying attention to your file naming nomenclature, makes it a lot easier to build your learning library and your study room and some of that stuff. So you'll see that I do that with all my files, all my trade frames, my case studies, the quizzes. Using standard file names allows me to group that stuff conveniently and easily. So if I wanted to study, for instance, 5-day down case studies, I can sort it by name and just go to look for 5DD. Actually, I don't have those in here. Oh, I was just sorting my PDFs, but all the 5DDs start off with the file name 5DD, for example. Anyway, back to the report. Okay, so we are in bullish normal still mostly overbought. Today's little work gave back a little bit from the high, but it's still pretty strong. We're in the yellow bullish now, so that's actually an improvement. We're now 8% away from the 200-day moving average. Risk Z is still warning. We're still allowing us to be risk on, but is warning us that we are at extended levels of goodness. And, the last time it was at this height, it did decay all the way into the winter. And so it's part of the way. But you can see that that's actually slowing down here. And we're in a critical state. This could reverse to the upside like this, or could also reverse all the way back down to the zero line. And then if it collapses the zero line, it could come all the way down like this into the winter. So this looks like a critical state forming to me. The holdings are still showing all US all the time. ETF2 improved to 80% exposure. The monthly market health check showed a universal entry on the monthly to the upside. That's very strong. The 9-day 1, 2, 3 entry to the upside, very strong. This suggests you want to have your stop not lower than about 460, which is about 1.5%. I suppose you could live with the 2-bar low, not later than the PSAR though. Weekly, really strong move. That's like 5 strong moves in a row, and it's approaching the Z3 breakout. So this is really an accelerator. The 3-day uninterrupted. I kind of like the 3-day chart as a reasonable, smoothed swing trade environment. And when you see that kind of support at the bottom of the river, and then you see it cross the baby dragon, there's your RLXD, there is your PSAR flip entry. And that entry would have gotten you in approximately, I would say about here at about 448. We've seen the daily already. In the ETF portfolios for BMR, the winners continue to win. That's really strong. All the winners continue to win with really strong days. There's mid caps crushing it, small caps really crushing it. Both of them are better than the S&P. So this may be a shift away from the large to back to the mid and the smalls. Latin America, emerging markets still just getting slaughtered. In ETF 22, consumer discretionary based on the strength in Tesla, Home Depot, and Apple. Tech of any flavor did pretty well. And again, you can see the Russell and the mid cap still holding their own. ETF 32. Yeah, it's still the same 4 biggies. Discretionary, tech, clean energy did pretty well. iShares, it's just the big fat US indexes. That's what you need to know. In the Dow 30, Nike, it remains to be seen if there's more room in there for Walgreens or if that was just kind of a 1-week anomaly. I think you gotta like McDonald's. And where is my Microsoft? Where are you at? There we go. It's not too bad in Microsoft. The default position. Sector spiders, the semiconductor portion of tech, transportation starting to rock there. And even retail. Is that part of the holiday buying? People buying earlier because of the delayed supply chain, possibly. All US all the time. Growth is crushing it. These are the ones that are green and white are the new winners here. So read those and enjoy. Discretionary, energy, semis, tech, and tech. That's the green and white. Was good, now great. The most liquid ones, again, we're looking at the ATR percentage because these are all very liquid. And now we want the ones that are also volatile. These make the best short-term trading candidates. So the energy sector, then Brazil and oil exploration. Now you have gold miners, biotech, regional banks, and silver. Pretty good stuff. Leave the ETF 2 for your reference if you want to look at the things that are just getting slaughtered. As a deep value player, you might be waiting for them to come out of the winter and start looking for them on a weekly basis for the SSC. To the dailies. We've seen this one already. Just a couple dojis today, just a couple auto framers. These OR shorts, the overreaction shorts, these are the ones that had been lagging but have bounced so high that if the market got weak, you would not be surprised to see these things lead the way back down like a dead. This is an alert about a potential dead cat bounce if we see a weakened market. In the ETFs, again, just four dojis, and emerging markets and Latin America are the only ones far enough away from their 10-day high to give any kind of bounce for a like an auto framer trade. And again, very few on the auto framer because we're so close to the 10-day high. DIA still on the daily squeeze. That's good. SPY is pretty close. So today's small range is actually a favorable sign to the upside. Being dominated by the summer. All green all the time. Those are your winning positions. That's where your concentration should be. And everything's normal here in the world of the market health check. So that's everything we got today. Thanks for your kind attention. Tomorrow morning, 8:30 for the coaching group. And we'll be talking about our research weekend stuff, as well as the creativity workshop and the catalyst workshop that's coming online. And then foundations Q&A at 6, swing trade frame review at 8:30, and then Sunday, 8:30 in the usual time and place. Okay. That's everything I got for you guys. Take good care, and we shall see you tomorrow.